Let me also welcome on board Rajesh Palviya as well as Kunj Bansal joining in on the show right now. Kunj, I guess Zee is where all the action is right now. News just in, the NCLT has approved the Zee merger with Sony India. They've dismissed all objections from creditors. The only overhang, I guess, now or the other event is that SEBI is yet to pass the final order against Subhash Chandra and Puneet Goenka. But does now Zee become a buy for you?
I wish I had such simple answers to such simple questions. Market is God. Market as well as stocks, as we all know, move basically on two reasons. One, in the medium and long term, on the consistent financial performance that a company delivers, good or bad, and in the short term, on news flow, sentiment, demand, and supply, and all that. Now, there are some stocks, some managements wherein the news flows and the sentiments and the demand supply pressures are always more dominant over the financials. So very difficult to take such calls. These are more or rather better taken call by studying of the technical charts and patterns instead of trying to apply mind on the fundamental side of it.
Nooresh, now locked at 15% of a move, 278 plus. Let's revisit your strategy on Zee.
So like I discussed some time back, 280 was a target price and 300 was the next. 300 was the last gap up. So I would expect it to pause around the 300 mark in this move. So I think it should open just few minutes before the end of day the circuit. If that comes, it could be closer to 300. And that's the price point where I would expect it to pause.
Okay, so that's the take coming in. Kunj, I wanted to shift focus away from Zee Entertainment now and talk about Max Financial. In fact, we should also be playing in the bite of the management because there seems to be a vote of confidence coming in with this entire infusion from Axis Bank to the tune of 1,600 crores. But as a business, in terms of insurance, which are your top bets, Kunj?
Yeah, so insurance industry has really gone through a lot, especially in last 3-4 years. In terms of continuous withdrawal of support by government across the various areas. In addition to the government support withdrawal, in terms of the help from the distribution commission and the incentives to be distributed to distributors and things like that. So I think today insurance sector is at a place wherein whatever valuation it gets will be on its standalone performance basis and not on the basis of crutches of the policy support like taxation benefit and things like that. And which is where after the announcement as recently as the last one being in the budget in February about 6 months ago, we saw a sharp dip in the whole insurance sector as a whole because of the withdrawal of the tax benefit above I think 5 lakh rupees limit or something like that. But from there on, we have surprisingly seen the whole insurance sector kind of getting re-rated, the stocks moving up, obviously the valuations also moving up in line with that. A few things. One, in general, we have seen interest in the market. We have seen the global money coming in, except in last few days when again it has become subdued, but otherwise 3 months have really been good. And as I said, I think finally where market is able to realize that now whatever reward market gives to the insurance sector will be on its standalone performance instead of the performance on the support of crutches. So this is where we are today in terms of the buying investment in the insurance sector could continue likely.
So take coming in. In fact, since we were talking about Max Financial, let's also listen into what the management had to say on their con call.
Our solvency margin is going to go up by 39%, which will give us good capital in the business, which is required for growth. We have very aspirational plans for future, which we have been repeating again and again. We have specific plans to drive growth and growth upwards of 20%. We have plans to become dominant in two areas: protection as well as retirement, and within that annuity. And as you know, these product categories require capital because the initial requirement of capital on both these products is higher than the savings plans. For this to happen, we do require capital as a business, and we actually raised this with our shareholders, and shareholders kindly agreed that rather than doing a secondary, this will be a primary where the capital will come to Max Life Insurance. It's really a positive step for our growth, and we are very optimistic that this capital which is coming to our business will be good for driving our growth for at least next 18 to 24 months. So that gives us good capital for growth.
Let's just revisit some of the other big buzzers in trade. I mean, talking about financials, look at the move on an MFSL. Look at what's happening with the Manappuram. That's holding up very, very smartly. Of course, topping the charts continues to be Zee. Even some of the banking names like IndusInd are fairly resilient in an otherwise weak and bleak environment for banks ever since that ICRR announcement came by in the policy. IndusInd Bank is still going strong, up about 1.5%. Did fall post-policy, but from there has seen quite the steady recovery. But still under pressure for the rest of the banking pack. So Kotak, Axis, HDFC Bank, they're all still very much in the red as we speak. And I think that is the case with an ICICI Bank and SBI, although SBI has recovered much of its lost ground, now lying only flat in trade as we speak right now. Kunj, before we wind up for the day, just wanted to understand if you think there are still opportunities in the market and where you do see both PE as well as earnings growth.
Yeah, sure. So before I exactly come to that, very quickly, few numbers. If we look at the recent past, on 20th July is when we had the peak of the market. Nifty almost just falling short of touching 20,000 and coming back from there. So last 20 days, we have been in a correction to a flat movement of the market. In fact, if we expand this horizon slightly longer, October 2021 is when we were at 18,500 on Nifty, and today at around 19,500. So that's hardly 6 to 7% move in more than 20 months or so of the market. So that's the position. So it's largely reflecting a consolidation that has been happening. Of course, you can look at it the recent March lows, from where we have moved 16-17%. Anyway, coming back, yes, there are still opportunities in the market which remain at all points of time a combination of fundamentals and valuation. I think pharma is one sector which had remained neglected for long, for last 7-8 years or so, and which is where we seem to have been seeing the interest coming in, partly or largely backed by the finally improving financial numbers, both in the US market as well as in the Indian market. And I think that's where something similar like that can continue to remain an investment opportunity.
Numbers for KRBL were also out and they looked healthy on a year-on-year basis, while for Chemplast Samna there has been a bit of a deterioration. The company has reported a loss versus profits, but KRBL is reacting positively. It's moving high by around 3%. But let's quickly go across to my colleague Sharat to find out what the buzz is in the dealing rooms today.
Well, yes, in focus we are having Relaxo Footwear, and what we are hearing from the dealers is there's certain counters are seeing buying coming from domestic institutions and also certain HNI as well. Now, do remember that the delivery of the stock itself, that has increased from its 2-day average of almost, you could say, 49% to 62% levels. That means the delivery levels are going high, and the large key DI invested already in the company includes SBI Mutual Fund, having roughly 7% stake in the company. Apart from that, do remember the stock is still down 13% from its 2022 highs itself, and recently the Q1 numbers came, and of course there were weak set of numbers and consumption impact was there, but there are certain green shoots coming in, and especially the performance of the open and closed footwear category, that was pretty strong for Q1, and of course the monsoon season has been kicked in. Because of that, the demand has gone up, but the management commentary has also been strong when it comes to the double-digit volume growth which they have actually maintained for FY24, and also they're expecting the margin recovery to kick in, and of course they are also stated that the average selling prices, the ASP prices, they are not going to go for a cut during the festive season. And lastly, the market demand, that itself overall is expected to increase from the second half of FY24.
So much for that. I think the other reason why KRBL is going higher is also...
So I think that position is going to expire today, and then possibly tomorrow onward we can see again market or index can start again railing further higher. So we are projecting a target of 19,750 from here onward, and keeping a stop loss of 19,480 for Nifty to buy in this decline. On the Bank Nifty also, 45,000 is the key level. But at the current level, as we are holding 44,300, still view on the Bank Nifty is on the buying side only. 44,300 is the stop loss to hold a long position on the Bank Nifty. Some pressure is there, but looking at the overall data setup, we expect that if we hold this level, then possibly we can expect a rally in the Bank Nifty also from tomorrow onwards. So we are projecting target of 45,000 immediately for Bank Nifty also.
Rajesh, give us some BTST ideas too.
So the stock which we like for the BTST perspective, that is HDFC AMC, is looking very promising. Short covering action is there. Stock managed to give breakout of its previous swing high, and looking at the overall setup, we expect that HDFC AMC can continue furthermore upside. 2640 is the immediate target we are projecting, and one can buy with a stop loss of 2550. Another stock that we like for BTST point of view, that is ONGC. Very sustained buying action is happening in the stock. Series of higher top, higher bottom formation taking place. Stock is moving in upsloping channel on the daily chart. Today's session also there is a buying interest for the stock. We expect ONGC can scale up to the level of 187. So buy with stop loss of 174.
Nooresh, let's have your BTST trades too.
So first is again ONGC only. The stock looks very interesting on the longer term chart as well. On the short term chart also showing a lot of strength. Stop loss at 176, target of 1. Second is a buy in IndusInd Bank. Clearly relative strength in the market where Bank Nifty continues to correct. Heavyweights continue to correct. The stock has hit positive for the day and showing a lot of momentum, not far away from a 52-week high. Stop loss at 1420 now revised and a target price of 1470.
Okay, point taken. Those are the BTST ideas coming in from our charters. But what else is buzzing? Look at the move on JSW Energy. There's not any fresh news flow as such, but that stock is high around 7%. Kunj, what's your take on the power space? I mean, Tata Power came out with its numbers. It was a very steady set. And when we asked the management that, Street is complaining that there's no fresh trigger for the counter, he said that given the fact we are, providing stability of earnings, that's a trigger enough because historically the earnings have been very volatile. What's your take?
Yeah, so it's always difficult to connect, especially for managements, their performance and expect market to reward the market cap in a certain way. Market has its own ways of rewarding the market cap. As we were discussing earlier, also in the medium to long term, it always looks at financial consistency of financial delivery, and in the short term, the news flows, the policies, the demand supply, and the sentiments. Utility as a space has always been patchy. There are phases wherein it doesn't perform, just remains flat, in fact underperforms the market, and there are phases when suddenly there is a re-rating for the sector as a whole. Within that some specific players. Now in power sector, we obviously have been seeing that for last 2 years there has been a consistent movement away from thermal to other renewable sources, and which is where all the smarter managements, the companies are entering. So I think going forward, the reward will come to such players which have their power generation coming in from multiple sources, including more focus on the renewable energy sources.
Okay, important day. You've got Hero MotoCorp, which is due to deliver its numbers, as is Apollo Hospitals. So let me quickly take it across to Srishti, find out what the street is anticipating from these two very important numbers, Srishti. Let's start off first with Hero MotoCorp.
Well, yes, absolutely. Talking about Hero MotoCorp, we are expecting a decent set of numbers given the fact that the volumes have seen a jump of 6.5% on a sequential basis, and similar kind of a growth we are expecting onto the top line of the company. Talking about EBITDA, a jump of 9% is what we are expecting, and the margins are expected to see a jump of just 20 basis points because the raw material cost inflation will row its play. But other than that, the company has been hiking the prices of its vehicles. On an average, 9% is the YY average selling price hike, is what the analysts are factoring in. On the back of that, 13.2% is the margin figure, is what we are expecting. And lastly, onto the bottom line, almost a flattish growth on a sequential basis. 872 crores is the expectation, but the company has been doing great in terms of the new bookings for its Harley X440, but now the bookings have been halted. So going ahead, what is the commentary on that particular front especially will be the key to watch out for, and as well as their demand outlook in the domestic market. So these are something that we'll be watching out for Hero MotoCorp earnings. This is about Hero MotoCorp. I guess the earnings are later today around 6 p.m. But what about Apollo Hospital? It comes out with earnings tomorrow. What are the expectations there? Set expected from Apollo Hospitals as well, because from the whole hospital pack we are seeing a good set of numbers. And for Apollo Hospitals, the major driver will be the pharmacy segment, because for the hospital occupancy level, analysts are factoring in a steady quarter-on-quarter this time growth coming in for their occupancy. That's expected to remain steady, but when it comes to their pharmacy business, that could give a good push. Over 20% jump on a YY basis is what they are expecting. 1800 crores onto the
pharmacy segment is what they are looking forward to, and this growth will be led by the store additions and the higher sales from the existing stores. Let's talk about the numbers then. A revenue jump of 2.5% is what we are expecting. 4,402 crores coming to EBITDA figure. A jump of 5.1% is what we are expecting, and margins are expected to improve just a bit from 11.3% in Q4 to 11.7% this time around. And lastly, onto the bottom line, a profit figure of 181 crores is what we are expecting at ET now. But when it comes to the losses from 24/7, that's expected to remain elevated at this point in time. So going ahead, how is the company looking at reducing the loss from 24/7 as well as their occupancy level, and updates on the organic, inorganic expansion plans? These will be the key things to watch out for when it comes to Apollo Hospital earnings. Back to you. Okay, that's Apollo Hospitals as well as Hero MotoCorp, which is due to report its numbers today. Apollo Hospitals a little bit, of course, under pressure, 1.25% lower, as is the case with Hero MotoCorp. Let's see where the market as well is headed. I don't think we've seen much of an material improvement, although given the weekly expiry, must admit that we've made it back to 19,600, at least for the Nifty futures, not quite for the spot still. But a 0.5% dip is something which is par for the course, right? After the announcement that came by from the Reserve Bank governor, interim as it may be, but a move to tighten liquidity nonetheless. So yeah, Asian Paints, Kotak Bank, Britannia, Nestle, HDFC Life, Axis, Maruti, ICICI Bank, Bharti, Tata Motors, they've all been in the red and a little bit under pressure. Rajesh, wanted to get your take on where you see the Nifty Bank headed next in particular.
So Bank Nifty, as we have seen a corrective action in today's session, but still as we are holding 44,300, which is the important support area. If you look at the next week put base as well as the monthly put base, that is very much there at 44,300, 44,200. So we are very much holding those level on the Bank Nifty spot. So till we are holding these level, we are very much optimistic that there could be a possibility of again pullback action from tomorrow onwards, and possibly on the higher side 45,000 is likely to act as a immediate supply zone. Once we crosses those levels, then this rally can extend towards 45,400. Most of the banking stocks are showing accumulation and buying interest at the lower level. So we expect some of the private banks may again start showing some uptick from here onward. So Bank Nifty is also attractive. It's an attractive level to again reinitiate the buy in this decline.
Okay, so that's the take coming in at that. Some of those indices are available at good levels to buy because the long-term uptrend is likely to continue, but that trend wasn't working out today. On that note, we let you go, gentlemen. Rajesh, Kunj, as well as Nooresh, thank you so much for joining us on the show.